Well, that's it. Officially bear market territory this morning in the S&P 500. We were already there in NASDAQ. The Russell, I believe, is even further, way further lower than this. Across the board, the indices are in bear market official. At MicroOps, we use the SQN indicator to identify the market regimes. And this would have us in a, oops. This would have us in the bear quiet market regime. There we go. Bear quiet market regime based on the red histogram there. You can see how fast we went into it. Certainly February, mid-February to almost so about 5 weeks, we go from 6150 to 4800 or so on the S&P. The bear quiet market regime that we're in, don't let the name fool you. It is very volatile, but relative to the bear volatile, so the bear quiet market regime we're in, the bear volatile market regime is actually substantially worse in volatility. It's way more volatile than this. So don't compare it to like bull quiet, which sounds like bear quiet, just the opposite direction. Each market regime trades completely differently. The bull quiet is actually very low, the lowest volatility regime that is in the market. The highest volatility is bear volatile, and that's a tough one. So some characteristics of the bear quiet market regime is very headline driven. So we don't look at like technical setups nearly to function nearly as well as they do in like the bull quiet, the neutral, the bull quiet market regimes. Headlines tend to be the big driving factor. So a lot of systematic trading tends to break, or you need to be focused on a system that is systematic just in the bear quiet market regimes, and assets specifically. Headline generated, government intervention, both causing the chaos and the cure. We'll see. I got a little things to talk about there. And good news typically lasts for a short period of time and then it ends up being sold. They use rallies to exit positions. Bad news continues to be sold. So if that changes, where you see good news holding up for sustained days and bad news hits and it doesn't crush the market after a good news event, that's like a good sign that we are changed, that we've changed and we're more constructive again to bottoming and reversing higher. So let's start out even bigger. A lot of people are really focused on when the government is going to cave, when the Fed is going to step in and cut rates, or when the administration is going to say, "Oh, you're right. Yeah, these tariffs were too draconian, and we need to walk it back, and we'll make everybody happy." Let me just start by saying this. Think about so the current president. This is a very unique situation. The current president was president before. He was elected, and it's been said, I can't say if it is or not, but it was somewhat of a surprise that they thought it was somewhat of a surprise that they won the election. And so they had to scramble to really get things going, bring the people in and get people doing the things that they wanted to do in that administration. And you remember, they went through a lot of people often. They were constantly getting people in and out of the administration. And so, the next election, he doesn't get voted back in, he loses. And he has the time to sit back and say, you know what, first of all, do I want to do this again or not? He made the decision, yes. So, okay, what do I want to get done? Do I just want to go back and be in the office again to be in the office? Or do I actually want to get in and do stuff? Keep in mind, this guy's, pretty old. This is his last big show. This is like the name forever will be kind of remembered on this period right here. So it seems like he's looking to do historical things. Um, he also knows, based on his last, like, think about if you did something for 4 years, you got taken out, and you decided to come back and like get voted back in to do it, and it's kind of the end of your life, and you want to actually have some change. What would you do? You come in day one, just go 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 go. You realize, he likely realized how little time he actually has to affect all of the things that he wants to do, and this sets up that, these things set up the next thing, and the next thing, and the next thing. So I think that's probably what we're up against for the next 4 years, is just it. you know I don't think it's going to be, oh, just kidding, we'll cave and we'll let this go. I think he's has the fortitude to push these things through, um, deal with the short term pain. He's been saying that, so I just wanted to like frame it like that. Like, the guy has a do over, and he knows how important time is in this office. Um, he has a much better appreciation than he had the previous time. So that's not a vote for or against, like, great, yay, this person, or, oh, I hate him, or anything else. Just what's the game we're playing here? Okay, this is not going to be resolved instantly. So with that, now we're going to take a look at where we are in the markets. Okay, this is the S&P 500. We're in that bear quiet, across the board in the indices: Russell, S&P, Dow, NASDAQ. We have some potential reversals coming. We have big reversals today in the bonds. Um, this is not normal. None of this is normal, right? This weekend, I did a poll on Twitter, and I put it out on, I believe, Saturday, and it finished up on Sunday before the open. And the question was, have we bottomed yet? Will we bottom this week, this month, or this year? And notably, there was 187 votes during the weekend. I mean, that's not a huge, I don't have a huge audience, but I mean, it's like 1% of my audience, maybe 2% of my audience. Not a lot of people voted, but honestly, it's pretty significant, the results nonetheless, right? Like, everybody believes that this will be resolved, but nobody really thinks it's going to be done right away, really quickly. 7%, so even fewer, thought that we bottomed over the weekend. So I did the same poll today, and 60 people have voted, and it's even now. It's completely, I mean, slightly this month, but it's almost completely. And within, even if we're looking at 20% of 60, so 30, no. So about the same number of people have voted for today was the bottom, as did on Friday. So Friday, there was no way that it was the potential bottom. Today, I don't know. People are thinking that it might actually be the bottom. Okay. So what I want to do is I want to go back to my trusty, this is the 10-week simple moving average of the NYSE advancing issues. This is one of my favorite crash bottom breadth indicators. Okay. They caught the 2018. Let's move this along so we can see. Here is the 2018 bear market, where it sold off basically for 3 weeks in December, bottomed on Christmas Day. And then, as you can see, it kind of moved right back up to the COVID high, which, again, we crashed, bottomed, and then off and running. The October 2022 low, again, that caught the bottom and then moved on. What I also want to point out is look, this goes back to the 1990s. The last time we got this, we have four lows since 2018 and none since the 1990s. I don't know. That seems significant to me. I will point out that we've not hit it, but we're generally there. So there are a couple of different types of bear market bottoms that I have been able to recognize. The first would be, or a bear market, I should say. The first one would be the 2022 bear market, which lasted about 10 months from January to October. And you can see by the chart, let's do it 1 week, so it's like even here. You can see by the chart that it wasn't really a like spike. There was some, the April, the world, or the Ukraine invasion definitely had some moves. And then in the summer, Powell did a speech, and that kind of scared everybody. But that was it. It wasn't like this. The initial sell-off was kind of exciting, but it wasn't like what it is right now in the markets. Right now, it's more like the sharp COVID type of sell-off where it just happened and then boom, 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 3-4 weeks, and then that was it. So the rapid news event, a crushing blow, and then that's it. So in essence, we have like those two types of markets: a fast recovery, which is initiated by a fast entrance into it. So far, that's my analysis of it. A fast entry into a bear market like that, right? We go from 3,000 down to 2,300. So, 19.9% down move pretty quickly. The only outlier that we have is the global financial crisis, which was a slow drift down. And then we had Lehman, and it all just kind of crushed. It just fell apart. So the longer we're in this bear market, we're more open to the fragility of something breaking. Same sort of thing happened in 2001. We had the dot-com bubble, kind of sell off. Had a bit of a, it looks like we were coming out of it, and then 9/11 happened. Boom. And so that just kind of like kicked it off to last a little bit more. And you can see the initial reaction to 9/11 kind of brought us up for a little bit for 6 months, and then it broke again. So that's in essence what we're looking for. Are we going to be in a fast paced sell-off that gets caught and then returns, or are we in that long slow grind that opens up the high risk area? At the moment, we are currently at the support levels of the 10-week SMA of advancing issues. And we've done that fast drop. So we could stop from here and this could just do something like, something like this. We don't even have to, recover until whatever, 2 years, 3-4 years. As long as it's constructive in this sort of way. What I would be surprised to see would be, something like this, but could happen. Certainly could happen. The one thing I don't want to see is, I'm not looking forward to that. But nonetheless, those are all potentials, and we just deal with the potentials we have in front of us. So, one thing I was looking at this past week end was the idea that this trend line here from the COVID bottom to the October 2022 low, which almost looks like it held October 2023, is right there. And we are reacting up off of this bottoming area. So I'm watchful that something is that we will have resolution at this level. I'm open to this being a place, this 4,800 level, whether it here above it or below. It doesn't have to hit exact. I don't believe exacts are super useful in these sort of things. So if we were to move from the tails and just track the bodies, well, we did it, right? So if we just did the bodies and not those wicks or tails, whatever, on that, well, we reacted up off it today, and we want to see follow through. We want to see what happens here. This would be our first level of support. It doesn't have to be done. Like, we could still see 2,200 or whatever, but so far bottoming at this key level with that right there. And I believe the market is starting to believe the administration that's saying, oh, okay, you mean business here. You're not just going to do the old bring in the Fed and cut rates. You're actually, Bessent has been out talking about all those things. That's my take right now. It's Monday, April 7th. a few days into this tariff situation, and we're mostly in at macro ops. We're mostly in like high levels of cash, not really dealing with too much here. We're waiting for opportunities. We're still up on the year. We're up. I think I'm up 5 on the quant portfolio, 5 or 6%, and then the discretionary I think is up 5, 6, 7% on the year. Down from I'm down from like a 1.5% from my high water mark. I think the discretionary portfolio is down a little bit more, but we're still substantially higher than the negative 20% that the S&P is down. And so we have plenty of firepower when we get this figured out and we have some good opportunities starting to develop. Metals, energy, bonds, currencies, ags, and of course, equities are going to start looking a heck of a lot better for our systematic stuff as these things recover. So we're excited about the rest of the year, but definitely not making any snap judgments or snap decisions until we get follow through and, of course, back into our new regimes. That's what I got for you guys. That's the weekly market overview, kind of a late one here, but this is what I'm focused on right now. This is the only thing to be focused on in markets until something arrives. Systematically, all my systems are just waiting for setups. There's potential setups later this week. And we just started a new cohort of the Trading Thunderdome, which is actually going to be during the trading day from now on, or at least for this next cohort. So I got links to all that stuff down below if you want to, trade chillax like we are, and get after this stuff. Join us, macro-ops.com. I love you guys, and I'll see you next time.